The moment a major announcement hits the market, many traders make the same mistake. They see the first candle explode on a chart and immediately jump into a trade. 10 seconds later, the candle reverses and the position is already negative. If you've ever watched gold or a major currency pair like the Euro USD during a major news release on a 1-minute chart, you've probably seen this happen. What was moving slowly a few seconds ago is now jumping between 20 and sometimes 40 pips in seconds. Meanwhile, your instinct is screaming at you to rush in before the move disappears. In the next few minutes, I will show you how to properly read situations like this and react intelligently during volatility spikes related to major news. We'll also talk about which news is worth paying attention to so you are not overloaded with information. If you're ready as I am, let's get into it. When a major announcement hits the news, it completely changes the market environment. Under normal conditions, prices move gradually. Candles are fairly uniform and behave more or less predictably. But big news speeds everything up. Reports on inflation, central bank rate decision, US non-farm payrolls, and other significant data releases can instantly change expectations about interest rates, economic growth, and currency strength. That's why volatility suddenly expands and multiple assets react at the same time. Gold, Euro USD, and other major pairs react instantly. Here's a simple exercise you can try next time a major announcement appears on the economic calendar. Go to Olymptrade and load gold, Euro USD, or any major pair on the 1-minute chart. Wait for the data release and do something most traders never do. Before you trade, ask yourself these questions. What news just came out and how important is it? Is the volatility settling or still expanding? Has the move already gone too far enough that chasing it will be risky? Are you reacting emotionally or following a plan? And finally, what's the maximum risk you are willing to take? In many cases, the next candle hesitates and partially retraces. Keep in mind that the first candle always reflects the momentary shock. The next candles reveal the real market reaction that you need to follow. News affects assets differently. Forex pairs respond to economic data almost instantly. Gold reacts sharply to interest rate and inflation announcements, while stocks and indices swing on earnings reports and geopolitical events. Knowing how each asset moves allows you to anticipate opportunities instead of guessing, making your trades smarter and less stressful. And here's another thing, every trader handles news differently too. Some traders try to jump into action instantly and try to get the most out of every release, even though trying to trade on short-term dramatic spikes is risky. Others wait for the initial momentum to settle, usually 1 to 3 minutes after the release, so the first moves run their course. Then they look out for breakouts and reversals after the first price movement slows down. With gold or the Euro USD, for example, it might jump quickly right after the announcement, then pause. That brief pause might shape how you experience new trading. Remember that risk management is just as important as timing. News would always create sudden movement, and what matters most is how you react when the chart suddenly accelerates. So the next time a major announcement takes place, open a 1-minute chart and watch how the first candles behave. If you trade on major pairs like Euro USD, pay close attention to US reports like non-farm payrolls and interest rate decisions, as these releases often create the strongest volatility. If you trade on gold, those same announcements can trigger sharp moves too, because gold reacts to changes in dollar strength. The more often you watch these new releases, the more familiar the reaction patterns become. The first candle shows the real shock, the next one shows the real direction. Once you begin recognizing that structure, trading on major news releases won't feel chaotic anymore. If you want to find out how to enter trades after volatility settles, watch another one of my videos, Top Secret Easy Strategy. You'll find a link in the description. And if this video helped you to understand how to trade on the news, leave a like and tell me in the comments which news event confused you the most when you first started trading. Non-farm payrolls, CPI, or maybe something else? Your answer might become the topic of the next video. Until next time, stay sharp, stay focused, and I'll see you in the next one.
Olymptrade. Care that counts.